If you are losing money in Forex, it's not random. Nobody tells you this, but your account is not being destroyed by the market. It's being destroyed by a few small mistakes you keep repeating without noticing. And the scary part is rarely one big mistake that wipes traders out. It's usually small habits repeated over and over until the account is gone. In this video, I will break down the top 10 daily forex trading mistakes destroying traders. Mistake number 1. Poor risk management. Poor risk management means risking too much money on a single trade. This includes using a lot size that is too large for your account, setting an oversized stop loss, or worst of all, trading money you actually need for living expenses. Let me give you a real life example. James, he has a $1,000 account. He wants to get rich fast. He opens a trade on GBP/JPY with one standard lot. That is $10 per pip movement. The trade goes against him by 50 pips. He just lost $500, half his account. In 20 minutes, then he panics, closes the trade, and now his account is $500. James also used his rent's money for that account. Now he can't pay rent. He is emotionally destroyed and he quits trading forever, blaming the market. This is the core idea. Most accounts die from improper risk management, not bad entries. You can have a winning strategy but still blow up because you risk too much on one trade. And this is the fix. Never risk more than 1 to 2% of your account on a single strategy. On a $1,000 account, your maximum loss per trade should be $10 to $20. Use a position size calculator and never, I repeat, never trade money you cannot afford to lose completely. Mistake number 2, trading without protection, no stop loss discipline. This is when you enter a trade without a stop loss, or you set one but then move it wider when the market moves against you. You refuse to accept a small loss, so the market gives you a catastrophic one. Let me give you a real life example. Sarah buys Euro USD at 1.1000. She doesn't set a stop loss because she knows it will go up. The market drops to 1.0950. She says it will come back. It drops to 1.0900. She moves her imaginary stop loss down. Then a major news event happens. Overnight, Euro USD crashes to 1.0700. Sarah loses $600 on a trade that should have been a $50 loss. This is the core idea here. One bad trade without protection becomes a disaster that wipes out weeks or months of profits. Let me give you the fix. Set a stop loss on every single trade before you click buy or sell. Never move it wider. If the market hits your stop loss, accept the loss. A small loss is a tuition. A large loss is bankruptcy. Mistake number 3, revenge and emotional trading. After losing money, you feel angry. You want to get it back immediately. So you take a bigger trade or a dumb trade, or you double down. You trade emotionally instead of logically. You believe that the market must go your way because you are due for a win. Let me give you a real life example. Mark loses $100 on a gold trade. He's angry. He immediately opens another trade on USD/JPY, twice the size. Without checking the charts, the trade goes against him immediately. Now he is down $250 total. Instead of stopping, he opens a third trade on GBP/USD. He is now down $500 in 1 hour. All because he couldn't accept the first $100 loss. And this is the core idea. Emotion destroys logic and consistency. The market does not care that you are angry. It does not owe you anything. Let me give you the fix. After 3 losing trades in a row, walk away. Close your trading platform. Go outside. Come back tomorrow. Trading is probability, not guarantee. Experience does not make you immune to emotions. Discipline does. Mistake number 4, overtrading and FOMO behavior. Taking too many trades. Trading because you are bored or seeing a setup that looks nice even though it does not fit your system. Also, fear of missing out. Jumping into a trade too early or at the wrong price because you saw a move happening without you. Let me give you a real life example. Lisa normally takes 3 trades per week, but today the market is moving sideways. She is bored. She sees a nice looking pattern on AUD USD. It's not her strategy, but she enters anyway. Then she sees USD card moving. She enters that too. By the end of the day, she has 12 trades open. She loses on 8 of them. Her account is down 8% in 1 day of boredom. This is the core idea here. More trades do not equal more profits. More trades usually equal more losses, more spread costs, and more emotional exhaustion. And this is the feast. Set a daily or weekly trade limit. If you don't have a valid setup according to your strategy, do nothing. Cash is a position. Waiting is a skill. Mistake number 5, lack of real trading education. Trading without an edge, not understanding the market mechanics, not being willing to spend months or years learning before trying to make money. Instead, you follow Forex lifestyle influencers on Instagram who show rented Lamborghinis and fake hotel rooms. You buy hype courses full of promises but no real content. Let me give you a real life example now. Michael sees an ad on YouTube, turn $50 into $10,000 in 1 week. He buys the $997 course. The course teaches him to use 2 moving average and a secret indicator. He tries it, he loses $500. Then he buys another course for about $1,500. Then another. He has spent about $4,000 on courses and lost about $2,000 trading. He still cannot explain what a pip is or how interest rates affect currency. This is the core idea here. Confusion comes from noise, not the market. When you listen to too many sources, YouTube, friends, Telegram signals, you end up with no real skill. And this is the feast here. Choose one legitimate educational source. 1. Spend at least 6 to 12 months on demo. Learn fundamentals, technical analysis, and risk management. If someone promises you fast wealth, run. Real traders look boring. They don't post Lamborghinis. Mistake number 6. Strategy jumping, no mastery. Constantly changing your trading strategy. 1 week you trade support and resistance. Next week you use RSI divergence. Next week you buy an AI bot. You never stay with one system long enough to actually become good at it. Let me give you a real life example. David starts with a breakout strategy. He tries it for 2 weeks. He loses some, wins some. He quits. Then he tries a moving average crossover. 1 week, not working. Then he buys a $300 expert advisor bot. It wins for 3 days. Then losses for 5 days. He abandons it. Then he tries Fibonacci retracements. Then harmonic patterns. After 6 months, David has tried 14 strategies. He is profitable with none of them. And this is the core idea here. Success comes from depth, not variety. One strategy traded with discipline is worth more than 10 strategies traded with confusion. And this is the feast. Pick one strategy, one entry model, one exit model. Trade it on demo for 100 trades. Track your results. Then trade it on a live micro account for another 100 trades. Only after 200 to 300 trades should you even consider changing anything. Mistake number 7, gambling mindset. Treating Forex like a casino, guessing entries instead of analyzing the market, believing that trading is just hit or miss or luck based, pushing the button and hoping. Let me give you a real life example. Kevin watches price go up, he buys. Price goes down, he sells. Price goes back up, he buys again. He has no analysis, no reason for any trade. He just feels lucky today. After an hour, he's down $200. He says, bad luck. Then he deposits another $300. He is gambling, not trading. This is the core idea here. No process means no consistency. Gambling gives you random results. Trading gives you statistical results over time. And this is the fees. Before every trade, write down why are you entering? What is your stop loss? What is your take profit? What is the trend? If you cannot answer all 4 questions clearly, do not take the trade. Mistake number 8, ignoring market structure. Trading against the overall trend, using too many indicators instead of reading price action, not understanding what the market is actually doing. Is it trending, ranging, or reversing? Let me give you a real life example. The daily chart of USD CAD has been in a clear downtrend for 2 weeks, but Maria sees a bullish divergence on the RSI 15-minute chart. She buys. She ignores the daily downtrend. The market continues down for 3 more days. Maria loses $400. She blames the indicator, but the real problem was ignoring the higher time frame trend. This is the core idea here. Indicators do not replace market structure. Price action is king. Indicators are just derivatives of price. And this is the fees. Always check the higher time frame first. On a 4-hour or daily chart, identify, is price making higher highs, lower lows? Is it a range? Then zoom in to your entry time frame. Never trade against the higher time frame trend without a very clear reversal pattern. Mistake number 9, greed and unrealistic expectations. Being too greedy, expecting unrealistic risk to reward ratios like 1:20 or 1:50, believing you will turn $100 into $10,000 in 1 month, thinking you will be a millionaire by next year, following fake Forex influencers who claim they make $50,000 per week. Let me give you a real life example. Tom wants to turn his $500 account into $50,000 in 6 months. That is 100 times growth. To do that, he needs to make 10% per week consistently. No professional trader does that. Tom starts taking huge risks, using 1:10 risk to reward targets that never hit. He holds trades too long, waiting for unrealistic profits. His account is empty in 3 weeks. This is the core idea here. Greed destroys good trades and good accounts. Realistic trading is boring. Consistent 5 to 10% per month is excellent. 2 to 3% per month is still good. This is the fees. Set realistic goals. If you have a $1,000 account, aim to make $50 to $100 per month. That is 5 to 10%. Compounded over a year, that is 80 to 120% return. That is excellent. Anyone promise you more than that is either lying or gambling. Mistake number 10, lack of discipline and consistency. Not practicing on demo before going live. Jumping from one strategy to another. Paying for unnecessary courses, signals, or bots instead of building skill. Treating trading like a random hobby instead of a structured business. Let me give you a real life example. Emily opens a live account the same day and she learns what Forex means. No demo, no practice. She buys a Telegram signal group for $99 per month. She follows the signals blindly for 2 weeks. Some win, some lose. She has no idea why any trade was taken. Then the signal group stops working. Emily is down $800 and has learned nothing. She quits. This is the core idea here. Consistency beats information overload. You do not need 10 indicators, 5 courses, and 3 signal groups. You need one system. Practice consistently for months. And this is the fees. Spend minimum 4 weeks on demo. Trade at least 50 demo trades. Then go live with a micro account as small as $50 to $100. Scale up slowly after 3 to 6 months of profitability. Do not buy any course until you have mastered the free education available first. In summary, let me remind you of the 10 mistakes. Number 1, poor risk management. Number 2, no stop loss discipline. Number 3, revenge and emotional trading. Number 4, over trading and fear of missing out, that is FOMO. Number 5, lack of real education. Number 6, strategy jumping. Number 7, gambling mindset. Number 8, ignoring market structure. Number 9, greed and unrealistic expectations. And number 10, lack of discipline and consistency. Let me tell you the hard truth. The market does not care about your rent. It does not care about your feelings. It does not owe you money because you lost yesterday. And this is the good news. Every single one of these mistakes is feasible. You don't need a PhD. You need discipline. You need a simple system and you need patience. Let me give you one task. Pick one mistake from this list that you know you make. Just one. Write it down. For the next 30 days, focus only on eliminating that one mistake. Then pick the next one. Thank you very much for watching this video. If this video saved you from blowing your accounts, then hit the like button. Subscribe to this channel. Comment below with the number of the mistake you struggle with the most. And I will see you in the next video. If you want to learn how to trade Forex, then I will leave a link to a recommended course. Once you begin that course, start putting everything you have learned in this video into practice.